Ever wondered how the silent financial ninja called inflation impacts home and wallet? Let's unravel this mystery. Inflation subtly influences everything from your daily cup of coffee to the grandeur of your dream home. Interestingly, the Bank of Canada recently declared a dip in inflation rates. This slight fluctuation may appear insignificant, but it's within these crests and troughs of rates that the economic wave thrives. You might be curious now, what does this mean for my home and mortgage rates? It's time to dig deeper. So how exactly does a decrease in inflation impact the housing market? Let's dive in. When inflation decreases, it often implies that the economy is cooling off. This can directly influence the housing market. Here's how. Lower inflation can lead to lower interest rates, making borrowing cheaper. This in turn can encourage more potential buyers to enter the market, driving up demand and consequently, housing prices. Now let's consider recent trends. We've seen a decrease in inflation, and alongside this, we've observed some interesting shifts in the housing market. Durable goods like furniture and household appliances have seen price declines. This might be an indicator of a less heated housing market, as these are often purchases made in conjunction with a new home. We've also witnessed home sales decrease following consecutive rate hikes. This could be a sign that potential buyers are feeling the pinch of higher borrowing costs, even as inflation falls. It's a complex interplay, and the housing market doesn't exist in a vacuum. It's influenced by a multitude of factors, with inflation being just one piece of the puzzle. This shift may seem daunting, but hang in there. We're about to break down what this means for your mortgage rates. Alright, let's tackle this. What happens to mortgage rates when inflation decreases? Well, it's a bit of a seesaw relationship. When inflation falls, lenders typically increase mortgage rates to maintain their profit margins. This is because the money they'll receive back from borrowers will have greater purchasing power in a lower inflation environment. Recently, we've seen this play out as the Bank of Canada reported a dip in inflation, and lo and behold, mortgage rates continued to climb. But don't let this scare you. Remember, while these numbers might seem overwhelming, they're just part of the bigger picture. Let's recap what we've covered today. We began by demystifying inflation, explaining it as the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Next, we delved into the impact of inflation on the housing market. As we highlighted, a decrease in inflation often signals a peak in interest rates, which can have a domino effect on the housing market. This is due to the direct correlation between interest rates and mortgage rates. We then moved on to mortgage rates, breaking down how they work and how they're affected by inflation. We noted that despite the decrease in inflation, mortgage rates continued to rise in September, a trend that has a significant impact on the housing market. Finally, we discussed the recent inflation trends, with the September report showing a decrease in inflation rates. This suggests that we may have reached the peak in interest rates. However, expectations of inflation remain higher than actual inflation, and rate cuts are not expected until the middle of next year. So there you have it, the lowdown on today's inflation number and its impact on your home and mortgage rates. Stay informed, stay ahead.